Hi, welcome to the Oak Trader Report on the 1st of April. These were mostly put together at around 11 a.m. New York time on the 1st. And a couple of thoughts in mind for this Oak Trader broadcast concerning the Chinese downtrend that started really in July 27th, 2009. And the full bear market cycle, the full top of the market, and the downtrend began in October 2007. So we're approaching something now. By October of this year, we'll be looking at a 7-year bear market in China if it doesn't turn around between now and then. And we've also seen the currency start to lose value against a whole host of other currencies around the world in the last 3 months. This is something I looked at in a broadcast about 3 months ago, talking about the one-way bet and how dangerous it is concerning the Chinese currency and how the US dollar would gain significantly against the Chinese yuan. And that's proved to be the case over the last 3 months, and it's quite a big trend that's developing. And of course this trend won't last forever, and that's the point of this broadcast. It's all in preparation of the future bull market in China. This bull market could be 6 months, a year, even 2 years away from taking place. There's a lot of pain that still needs to happen in the Chinese market. That doesn't mean that we're going to see huge new lows appearing in the Chinese market. That may well be the case, but that doesn't necessarily have to happen. Sometimes the stock market price precedes the negative news. So when the negative news comes out, literally everyone sells, but the positions have been taken by the people that matter, and they absorb what's being sold at the price that they're holding the market roughly in that range. But whatever happens during this base cycle, there usually is a shock or two to really completely neg people out on China. And the Russia issue has been perhaps one could say a little bit of a shock. Not so much a shock as in China's tacit support for Russia, but just in waking investors up to the fact that this is a communist regime. It's not what you would call in any way democratic, and things can go awfully wrong. They've had a good run at issues in the last decade or so, and I'm not going to say that any old idiot could have been in charge of China the last 15, 20 years and made a fortune, but it's all to do with flows of capital. The Chinese are very well versed in capitalism. They'd had capitalism as a system for 5,000 odd years, so communism isn't something that I believe will be around forever. And more than likely, I think the Chinese see the sense in being more aligned with countries like Sweden, Denmark, Germany, the UK, America. In the end, I think the majority of Chinese people see the sense in that. So I don't think that potentially is going to be an issue, probably coming more to do with debt and hidden finances and other types of issues that will come out in China in the next 6 months to a year. But even so, I'm preparing my capital to buy into the different markets in China, so I can take advantage of these opportunities when they appear. I've already done some very light buying just to establish positions, and also I do that as well just to focus my attention. Sometimes if I don't have money involved, my attention just doesn't focus on that particular area that well. So sometimes, as Livermore says, you put out a little bit of bait, you do a little bit of fishing, and it keeps you interested and tracking the market. But I think sometime in the next 6 months to 2 years, we will see the turnaround in the Chinese market, and we should all be prepared for a 5 to 6 year bull market in China. This is the US dollar versus the Chinese offshore yuan, the spot market. That spot means cash. And you can see the long downtrend being broken just about when we were talking about it in the broadcast, and the big upward move taking place. This may well fall back a bit to gain some more traction to carry on upwards, but this trend does look pretty severe, and it's been quite a shock to a lot of corporate investors, corporate treasurers that really should have no business in taking such large positions on currencies. And quite a lot of investors and large institutions have lost money. And on the other hand, of course, trading being a zero-sum game, in terms of speculation, there's been people that have made a small fortune from it as well. Euro FX against the Chinese yuan, you can see the spike up here, and it looks here to be building a consolidation here for another spike up, I believe, in the future. The odds are telling me that this would move higher from here. But again, I would probably wait till it broke out of this range here to show me on the upside that it had closed above the consolidation area and a new uptrend was beginning. But it does look quite positive for the euro to gain against the yuan. The Chinese yuan against the Japanese yen, and you can see here the Chinese yuan getting weaker, buying less yen, and depending on what I think it's Shinzo Abe does in China, does in Japan, concerning really going the whole hog and doing another round of quantitative easing, we could see this market come down even more, back down to around the 15.8, 15.7 level. And that's something I believe more than likely would happen. We've got a downtrend developing here, fits quite nicely. Even if it breaks above it, I still would be quite confident that the downtrend would continue. The yuan against the Hong Kong dollar, you can see here a massive move downwards and the breaking of a very long monotonous uptrend, and you can see the move that started the move downwards, a huge spike down, catching some people unawares. They fall into the Pavlov dog syndrome of just because something's been happening for years that it's going to continue to happen. A little bit like how some people get wrapped up in property just before bubbles crash or prices come down. It's always the best thing since sliced bread and the most steady thing. But again, you can see here that trends do change, and the yuan has taken quite a battering against the Hong Kong dollar. The Australian versus the yuan, and it's come right back up, and I think this trend will continue, perhaps with the odd normalised setback, and I believe the Australian dollar should get much stronger against the Chinese yuan in the next 6 months, and the trend looks set to continue here, at least up to the 585, 590 level. And if some bad news does come out of China very soon, we could see again this spike in prices. And once the market does reach what I believe a bottom, it would be a good time to use, and I wouldn't necessarily call it overvalued euros or overvalued dollars that you have that have gained significantly against the yuan, the renminbi, to use some of those to buy into Chinese stocks. It's the best of both worlds. You're using currency that's gained against another currency, enabling you to buy more shares. And then China should be a bull market if they can get the regulations, if they can get the different pieces of the jigsaw put together in the right way. It should be a bull market that accompanies their currency going up alongside the bull market. Some bull markets, the currencies go down and the shares go up, and vice versa. But I think the next bull market for China should be a bull market where the yuan appreciates against a whole host of currencies. We'll have to wait and see. But if that is the case, that's the best bull markets on the planet, because not only are you gaining from the share price as well, but you're gaining on the currency side. And they do make it hard for small investors to really get down and buy into certain companies and do certain things in China. But with the Shanghai Free Trade Zone and the opening up of special trading platforms, the regulations are slowly coming into place to make it more of an active market and to make it more of a mini America in terms of its capital markets. It's not rocket science. You know, these Chinese administrators, everyone praises them for how quick they get things done, and you know, sometimes they do get things done quickly, but again, it's not rocket science we're dealing with here. A free market capitalist system will do wonders for their economy, And if they don't free the market up in terms of regulations, they'll end up like another Brazil, or indeed Russia. And you can see here the FTSE China 25 index, an ETF. You can see the base action here. It's had no participation really in the bull market we've seen in America. It went up with it in 2009 and then it tapered off, and we've seen the market make lower highs. One high, one high, one high, one high. And I think perhaps this is set to continue. We could see it come down, but I don't believe there's been enough base action here in this particular ETF. And I think the market, although it could come up a little bit more, will eventually settle down again around the 30 level at some point in the next 6 months. And then from there, we'd have to analyse price action. But to me, this doesn't look great base action. If you run your mouse back to the beginning of the bull market here, you can see that's the type of action I like to see. I mean, moves can develop from these types of bases where my mouse is, but they're very hard to call until the latter part of any type of triangle was developed. And if this did develop around 40 and went sideways for a few months here, I'd be a lot more confident that it would break out on the upside. But again, I've just got a feeling that there's 6 months or a year's left of perhaps negative news to come out of China, and that may push this market down to around the 30 level. The China real estate, and as we know, we've all heard the issues concerning Chinese real estate and how they need to diversify certain parts of their economy, and there is a lot of pain to come potentially in China's real estate. I mean, they can choose to delay the day of reckoning again. I don't think they'll do that this time. I think they'll take a dose of pain, at least a sizable dose of pain, and then they may step in. So I think this market has quite a way to come down, and you can see it's broken here. If you look at this as the 1 point, the 2 point, 3 point where my mouse is, it's broken it, come back up. But I think this move is this market is set to continue down, and it looks to be developing into some sort of downtrend here. And I'm sure at some point there is going to be much more negative news out of China. And you've got a market there where a lot of the population can't afford what's being built, and then you've got capital restrictions on foreigners, in terms of land ownership and sometimes ownership of these businesses, and then they're bringing in some types of laws as well, making it more draconian for foreigners to get visas. So there is, that aspect of China where they could get it completely wrong in the next year or two and really screw up their economy, instead of reaching a level of prosperity on par with the West. If they make the right decisions, they are at a pivotal point in Chinese history at the moment. Join up with Russia and get sent back 50, 100 years just through their own fault in terms of the management of their economy. It will fall apart over there. Or they can choose to open up their economy and normalise their economy, and their economy will boom and they'll do extremely well. I think they'll choose the latter. The Chinese are very smart people. They're long-term planners, and I think they don't have that strong a relationship with Russia. They know that Russia has stolen land off China. When Russia invaded Mongolia and gave more lands to Mongolia because they had more control over Mongolia, China lost thousands of kilometers of land. The Chinese don't forget very easily, and I'm sure it's just a diplomatic game, and eventually their ideas, their philosophy will be more aligned, so to speak, to the West. And they've got some great ideas as well about sustainability and other wonderful Asian concepts as well that really could add to the world economy as well later on down the track. Once they've normalised matters in their own country, they really could be an influence on other countries with soft power as well, because they've got a great philosophy attached to their history as well. Asia Pacific, excluding Japan. It's a wisdom tree ETF. And you can see here that it kind of almost looks like the Chinese market in some ways, the FTSE 25 China index that I showed you. And it still hasn't recovered to the peak of where it went down back in the days before the Great Recession. It came off well before other markets came off in some ways. And you could see the volatility where my mouse is, and it's come right back down. It does seem to have semi-decent base action. If you draw a line where my mouse is down here, we do have a little bit of action above the trend. So that potentially could be a positive signal, but I wouldn't, be jumping into this. There is still quite a lot of problems in Asia, especially in Southeast Asia. The Philippines are doing okay. Indonesia, Vietnam is semi-okay. But places like even Vietnam, they really need to get regulations and modernize their economy. You can't just rely on, easy money flows to manage your economy. Eventually, you have to diversify and get something about you that's more than just about emerging markets and developing and building real estate. They're going to have to free up their economy, and it's the same with Thailand eventually, and Cambodia. All these countries are at pivotal points in their history. They're very tender at the moment. Myanmar as well, even Malaysia is potentially very unstable. So you've got 4 countries there: Vietnam, Cambodia, Thailand, Myanmar, Malaysia. That's 5. I'd even throw in there Laos. I mean, Laos is pretty much a dictatorship up there. It's run by terrible people with the sickle and hammer. You see that flag all over the country, and the people are just suppressed. And that's just really what communism was about. And the people over there have been brainwashed some bit. Of course, they were brutalized by the West as well. I think we dropped more bombs on them during the Vietnam War era than we did during the whole Second World War. But again, people had to be protected. And that's what happens when you choose one side of an argument, when the people didn't need to suffer. And sometimes there's some very pig-headed people that run governments. They don't do what's best for the people, they do what's best for themselves. So I think Laos, Malaysia, Thailand, Vietnam, all those countries are very, very tender. And with the ASEAN Union coming up, I don't think any country in the region is ready at all in terms of employment sharing, in terms of visa-free travel. I mean, it's in an absolute mess. It couldn't be in a more worse mess than it is, really. But no, in Southeast Asia, they will sort it out. It does have some great attributes as well, and it's a region that could potentially grow 6-7% a year for the next 25-30 years. If you combined it on average and you include Indonesia, and then you've got the Philippines as well. It's got some fantastic potential. Myanmar, these are countries with great people, but crap governments. And that basically sums it up. I can't really think of a good government in Southeast Asia. They're all run by semi-dictatorships. There is not one government in Southeast Asia that I could hold my hand up and say, they're a real government. I might not appreciate some of Obama's policies and even foreign policies, but he's running the country in the way that he sees fit in terms of his party base and his support along the lines of a philosophy of a country that has a Congress and has different institutions, and it can seem bureaucratic, but the system works. Whereas other countries in Asia, it's ego leadership. People like Hun Sen in charge of Cambodia, associated with millions that died in the genocide, the Khmer Rouge. Khmer stands for red. And then you've got the Shinawatra family in Thailand. The real head honcho, Thaksin, is running the country from Dubai, and his gang are called the Red Shirts, which is worrying really, because they talk pretty much the same as the Khmer Rouge, when they whip up the base in the countryside. So he's basically got an army behind him of what you would call red shirts, Khmer Rouge backers. He's quite, he just seems to try and please everyone in some respects, and that's why I don't think he's had much trouble staying in power by getting people elected. His populist policies. When I say try to please everyone that can matter. Whereas anyone that's outside of that sphere can get brutalised. If you look back in history to Takbai, where I believe 89 Muslims were shoved in the back of the truck. There was a drug war in Thailand without any judicial trials, 3,000 odd people slaughtered. The list of human rights offences associated with this man is extreme, and he basically controls Thailand. And he's best friends also with Hun Sen in Cambodia, and they're friends with the junta in Myanmar as well. So it's the people running the countries are not exactly stable, and they're very egotistical as well. So it's not a region that I believe will be stable. Some countries will be, and other countries I think will see revolutions. Thailand's a great country, the people are great, and I think it's a place that would be the place to do business in Southeast Asia, if anywhere, because there is a very huge counterbalance to the Shinawatra family. And it's actually very, very surprising the level of political intelligence amongst Thai people. Sometimes in comparison to the West, they're very aware of the corrupt nature of the government, and they're very aware of what freedoms have been quashed in terms of free trade principles and other types of populist policies that have been brought in by the government. They're well aware of why they're brought in. But again, it's another matter changing things. But I think that's why I hold the most hope for Thailand, because it's got a large percent of its population that are very well educated in terms of political bullshit. They understand the game, and they're very placid people in comparison to many, many people around the world. I mean, when they lose their temper, they can really lose it. But in general, it's extremely difficult for them to lose their temper. They're very placid people. Okay, so we'll just move on to this comment, the most stupid comment that I've seen all week. Today, on the 1st of April, it could be an only fool's joke. It was on the BBC website. But last month, anyway, the New York attorney, Eric Schneiderman, let's hope he doesn't go the way of the other New York attorneys, was investigating high-frequency traders. And then today, they're talking about the FBI opening up investigations into high-frequency trading. And then it says he's looking into several practices at high-speed trading firms, including a method of trading where a firm places a large order of trades in a company's stock, but then cancels them, giving the illusion of big activity in the stock. I mean, this has been going on every week, every month, since the foundation pretty much of the market, since there was a trade in public. I mean, someone at the FBI must have heard of the phrase painting of the tape. I mean, it was one of the things that Joe Kennedy, the criminal Joseph Kennedy, brought in 1932. And he was the guy that wrote the Securities and Exchange Laws. And he was a criminal. And they thought he was the best guy because he understood all the loopholes and how to manipulate the market. And they thought he was the best guy to write the rules. But aside from that fact, painting the tape, giving the illusion of big activity in the stock, I mean, this has been going on for the last 130 odd years. I mean, it's about time they investigated it, but it's very hard to take them seriously, especially when people were allowed to get away with such blatant activities as naked short selling and other types of manipulation practices. But someone really should clue them up to, it's not just high frequency traders. There's normal traders, normal hedge funds paint the tape. Everyone paints the tape that's got the money to paint the tape. So I thought that was the stupid news of the week. and then also into whether trading firms were granted early information ahead of institutional investors. And of course, we all know that's been going on. The Den of Thieves, the Wall Street book about Michael Milken, I remember reading that. It's quite a good book. But in reality, that's been going on every week and every year. And that's the culture. You're never going to change it. Just like the price rigging of LIBOR, gold fixing in London. It's just barking up the wrong tree. These things will never be fixed, and they're just wasting taxpayers' money. As far as a free market goes, that you won't find as many free markets as the trading markets in the world. And I think they should probably look into other issues, the FBI, and also the New York Attorney General. They should look into food processing companies and the fraud and the manipulation that goes on with food production. You know, that would be far more beneficial to the public than focusing on a battle where they can maybe win one or two battles, but they'll never win the war. You just have to look at history for that. And I think it would be far more beneficial if they focused in areas like food processing and manufacturing to really protect the public. S&P 500, where my mouse is now, 1 stage, 2 stages, and then a huge consolidation area. And then if we called this the 3rd stage, consolidation area, and then the 4th stage, consolidation, and then perhaps this is the 5th stage or part of the 4th stage. It's very hard to tell with indexes. As I've talked about in the last 2 months, I've lightened down some of my positions because of the bare fact of probabilities in terms of we're entering a year, in terms of a cycle, the 5th and 6th years of bull markets, they usually end. And then also in terms of the stages of the bull market. So I have been lightening down some positions, but a lot of the stocks I hold are still in good uptrends, and so therefore, like Livermore said, if they don't give you a reason to sell them, I haven't. Of course, I've lightened down a little bit, but if you draw a line from here all the way up, it's still in a very, very nice uptrend, and it's given me no real reason to distribute a significant amount of holdings, although I have been lightly distributing. And if I was to take a wild guess at the moment in terms of the index, I would say that we would reach a top sometime in the next couple of weeks, and we would have a volatile May and summer period, and then we would have quite a large correction. Not to say it would be a crash, but I think the correction would come down to around the 1450 level if that was to be the case. But again, I trade off individual stocks and how they're behaving, and that's the only way I can work, and that is my modus operandi, so to speak. So all this index predicting is exactly what it is, really. It's just predicting. Sometimes they do funny things, indexes. And I would suggest that this index will reach a high very soon. For the next 6 months to a year, the high would be reached in the next couple of weeks, I believe. At least by the end of May or April. And this was the price of the S&P while I was recording the broadcast at around 11:30. This is June contract, and it was on the 1st of April. And this is the beautiful monthly chart. Huge swings here, reminding us of the period of 1968 to 82, so to speak, even though the swings maybe weren't as wild. But I think if you looked on a percentage scale, they may be close. But the swings have been huge anyway, and you can see the market where it's broken out of that triangle, and it's got to reach a plateau soon, and that's why I've got a feeling that the distribution over the next 5 or 6 months will take place, and you know this should be around the area of the high. There's no reason to panic, but again, I think looking for points to distribute stocks when they give you the reasons, i.e. break-in trends, then it would be a wise thing to do that in the ensuing months, because we are at quite a high peak. And this is a contract where they've stopped recording the price back in 2013, probably because no one was trading it and it was so boring and no volatility. But I love the chart. Look how interest rates when everything was normal, and then look how highly manipulated they are and how much problems the world economy had at this particular time where my mouse is, and how they've been held down. And at some point in the next 5 to 6 years, interest rates should average around 3 to 4 quite easily, and maybe much higher than that, 5 to 6 to 7. I wouldn't be surprised to see things swing the other way in terms of savers and in terms of people that loan out capital actually receiving a decent return on what they're loaning out. Of course, if that was to happen, it would bankrupt a few countries, a few countries' governments, and that's why people need to get their house in order very, very soon. And these are the funds where I've received some questions from some members. What would I do if I wasn't trading in terms of being regularly involved in the market? I would still hold long-term shares, but if you're a fund lover, and some people are, they just can't resist them, then I'd be looking at this one for a long-term play. I think over the next 5 to 6 years, 10 years, it will do very well. You're buying in at extremely low levels. The ultra-emerging markets, pro-fund investor class. But yeah, I think it will do very well over the next 5 or 10 years. And I think this one will do very well over the next, say, 7 to 10 years. And they represent good value. These countries, again, just need to get their houses in order. It's not brain science what they need to do. And one day, even via pot luck, Argentina might get someone with a little bit of common sense to manage their economy. There's some good people in Brazil coming about. Colombia is showing good signs. So things, could perk up in Latin America one day. You never know. Pot luck, Argentina might actually get someone who knows how to run an economy. And if that happens in combination with Brazil, Colombia, and then again Venezuela, I mean, wow, if we could see someone who actually had some common sense in Venezuela as well, really, Latin America could be something special. But longer term, if you've got a 7 to 10 year perspective, this would be something good to look at. Okay, that's it for now. Over and out, and I'll speak to you soon. Bye for now.